What's up, guys? So today, um, I want to go over this morning's trade that I didn't take on my, um, I guess you can say challenge account or like fake challenge account or paper trading challenge account, but I did take it on my personal account, my own, like with my own money, and it was a pretty good trade. It did give us entry parameters today. So I want to tell you a couple ways that you could have done this. So starting, we already know that we're in bearish momentum here. However, we do have a bigger range here. And we're right at that 50% mark. Hold on, my bad. All right, hold on. Let me just use a higher time frame. All right, so yeah, I did expect that we're gonna have some kind of rejection from this daily order block, especially since everything is flowing bearish for like the past year, you know. We just keep going. There's big liquidity. We did break the liquidity of this one. This one extends even higher than just this. We did break this liquidity. So this could be a reversal down here, but that's not enough confirmation to say that's a reversal. So we're just playing off whatever the market is telling us. So I know that this is daily supply, right? So we know that we're like either in a retracement for continuation or reversal to the down, right? So from here, what I'm looking at is how the candles are forming. So around this time right here, we have a level of supply over here, 4-hour level of supply. Okay, that's pretty good. That's pretty solid. And to the bottom, we don't really have anything till down here, right? So what I'm looking at is a range. And you look at the 1 hour. So 5 o'clock came in around right here. Let's delete this price just so we know what was going on around that time. Well, you have to understand that you don't have to use higher time frames. I mean, I use them to understand direction, overall momentum, but it's just for information, really. It doesn't really matter. Like, you just have to kind of know, identify the trend, and I'll put like a full trading system video up pretty soon. But you just have to identify the trend, right? So the trend is obviously bearish here, right? So what I'm doing is, okay, well, we have signs of reversal down here, but highly doubtful. We did just run this liquidity right here. So usually after you run liquidity, you come up for a retest. How big? It could be right here. But honestly, with the exception of missing price up here, which I still do expect price to come back up here, there isn't really much here, and it's a Friday, so I highly doubt that we're going to get something like that. However, we're responding to the market, we're not reacting to the market. So over here is we have one bullish order block, another bullish order block, and then we have an impulse around 5 in the morning, right? So what I'm looking for is, if we're going to go back around right here, what I'm looking for is two positions, right? So this purple area is already supply. Okay, and then we have order block right here, 5 minute, but I doubt that that's going to hold up. It's also correlates with the London previous high, right? So usually what we're going to do is, if it keeps going down, we're going to take liquidity out around that time. So I also noticed that on the 2 hour there's missing price, which is why I put this line right here. This is missing price. So what I'm favoring is maybe price coming up for a sell to this area, filling up this missing price, and then coming back down. So what else correlates with that? There you go, another order block right here, and then another bearish order block right here. So I picked this one because I just didn't like the bearish order block. It does count, but I didn't want to put the stop right there, even though that's pretty good. That stop too. Actually, it played out just precise like that, but it's better to obviously put the stop. It's a lot safer to put it above the order block, right? So if we entered right here, even at the 1 hour, if we entered right here and put it above the 4 hour, not just this one, above the 4 hour, you could have gotten 11 pips right there, and then just target the bottom. Okay, that's a 1 to 5. Even if you're just trading the 1 hour chart. Okay, but we don't do that. Okay, we want to maximize our profit here. So we try to enter at lower time frames. So around 5 in the morning, obviously we're trying to set up for a sale, and price shoots up. 6 in the morning. Let's see, what time is it here? 4, 5 in the morning. Okay, so price enters supply here, right? And then we have a short-term break 1, short-term break 2. However, we don't get any return to the impulse from up here, so that's not a valid trade. We get all this choppiness over here, so none of this would be valid trades. But when we come up here to, let's say, let me make this a little bit clearer here. All right. So when we come to our POI, I ignore all this until price is at my POI. Okay. So my point of interest really is this missing price right here, this line on the 2 hour. Okay, so price enters my POI. What the hell is all this noise, man? Price enters all this POI and it taps into the 1 hour. Now, because, dude, shut up. Because it already hit 2 of my POIs here, I could have easily taken a trade from right here, right? And that's the trade that we were talking about around the 1 hour. Obviously, I'm looking at different time frames around this time, but I'm focusing on the 1 hour here. So let's say here, where are our entry parameters right here? Okay, well, we tapped in, we came back down, short-term low break 1, short-term low. When it comes to this, these aren't the best. I'm usually looking for 2 candlestick pullbacks, of course, but I can use this order block right here as a short-term low break, and then maybe this one over here. There's another short-term low break one, okay? But if you don't want to do that, then you can just use the next one and make it a little bit safer, right? So you have an order block right here, and that's already, price is efficient here. It's all mitigated. There's a little bit of missing price from here to here. So price comes back up, mitigates that little bit of missing price, and then comes back down. So you could have entered right here. This entry would have been for more experienced traders, but if you want to be more conservative, and I usually do around this time, especially this month, you would enter right here. Well, I'm looking for this. It broke this point of interest right here, tapped into my 1 hour supply. It gave me an impulse down. It came back to mitigate this order block right here, right? So we mitigated this order block right here, and this could have been a second entry right here. If you would have been confident, you could even put the stop on top of the price. So this would be the price. That's a 7.5 pip stop. And the first target was the liquidity to the bottom. That's 1 to 5. Easy, right? 1 to 5, easy. Or you could have taken this one, and over here, once it broke this price down here and it came back up for this one, you could have taken the price right here. Now you have this confirmation, this order block protecting it, this order block protecting it, and the safety of putting it up on top of here. But when you have this order block and this order block and you have multiple rejections, and this one didn't break this order block, then this is a little bit safer, right? On top of that, all the people that were selling right here were all stopped out by this candle. So that gives me the confidence to enter, and this is where I entered, right there, with a 5, I think it was a 5 pip stop. There you go. That's the entry, and that was a beautiful entry right there. See that? Write it down, take profits at this level right here, which was actually perfect. So I got, actually it was a 1 to 7. Let's see, where did I take profit? 1 to 7, right there. Yeah, it was right on the order block right here, because you could always come back down and then impulse even higher. So, I mean, I could have caught in a little bit more, but it doesn't matter, 1 to 7, another 1 to 7 for the week. So that's, for this week, is a 14 hour, but it doesn't count because I didn't put it on my paper trading account, which is supposed to be the whole purpose of these videos is to. But anyway, had I done that, the challenge is already passed. 10%, there it is, and a 1% risk, and that's the whole thing going forward. Is you see that's two trades, guys. This week, 2 trades. That's it. I didn't take any other trades because the market was choppy and it didn't give me my entry parameters. So this would have been a -1. It doesn't matter. I still would have been a 1 to 6, right? Next week I could have gone a 1 to 3 or 1 to 4, and that's it. You know what I mean? So when you have the right strategy going in, and you have the right parameters, and you wait. If I would have taken trades Tuesday, Wednesday, Thursday, they probably most likely would have all been losses. So I would have been down 3, so I would have only been at a plus 3%, right? So then, because I was patient, I only took the trades that called to me, right? So these are the trades. These are the things that made sense to me. I waited for it, and then you execute it on time. Okay. So again, this is just for my personal account. I didn't take it for the other one, so I'm still technically at 7%. So I just need 3% more to pass the challenge. Again, paper trading challenge, because I'm not gonna take the challenge till January. So yeah, guys, let's see what happens next week. I'll catch you on the next one, and I'm working on a little series to be able to explain all these things properly, and hopefully, in a couple of years when the channel has some viewers and stuff like that, it'll provide, something cool to look back on and say, like, this is where we started. All right, guys. Well, I'll catch you on the next one. Have a good weekend. See you again.